This is the Future of Automotive with Steve Greenfield.
Welcome back to the latest episode of the Future of Automotive on CBT News, where we put recent automotive and mobility news into the context of the broader themes impacting the industry. I'm Steve Greenfield from Automotive Ventures, and I'm glad that you could join us. Coming off last week's New York Auto Forum, J.D. Power reported that 2024 dealer profits were projected to be about $26 billion in total, which is down over 50% in just 2 years, but still almost 50% higher than before the COVID-19 pandemic. J.D. Power reported that short of another global production disruption, which is not expected, the $55 billion in annual dealer profits achieved in 2022, when new vehicle inventories were at their lowest level ever, is unlikely to be seen in the foreseeable future. The reasons? Dealer competition, manufacturing overcapacity, the uncertainty about EV adoption, and fluctuating consumer demand. J.D. Power reported that dealer margins got as high as almost 7% when retail inventories were under 1 million vehicles, and dealer advertising spend as a percentage of sticker price was just over 2%. As inventories grew, J.D. Power estimates retail inventories are now at about 1.7 million vehicles, and dealer ad spend rose accordingly from 2% to 5.2% and is still rising. Meanwhile, margins for dealers shrank from almost 7% down to 3.2% and appear to continue to head downward. The new Presidio report shows that franchise dealers experienced a 20.4% drop in profits in 2023 versus the previous year. Even with 2023's significant earnings drop, the average dealership net pre-tax profit in 2023 was still more than 2.5 times higher than that of pre-COVID 2018. With new car inventories mounting and front-end gross margins getting squeezed, I think we'll continue to see dealership profit margins drifting back to something closer to pre-COVID levels over the remainder of this year. So with that, let's transition to our companies to watch. Every week we highlight interesting companies in the automotive technology space to keep an eye on. If you read my weekly Intel report, we showcase a company to watch and then take the opportunity here on this segment to share that company with you. Today, our new company to watch is Finext Robotics. Finext Robotics enables warehouses of any size to deploy autonomous robots as needed with no expertise required. Finext builds simulations of your warehouse so that you can immediately see the efficiency gains from introducing their robots. Whether you're just starting to introduce automation into your warehouse or you want to grow your current robotic fleet, Finext can add robots as you need them. Leveraging the combined power of cloud and edge computing means that Finext has the lowest infrastructure and setup requirements to automate your warehouse. This reduces upfront and ongoing costs for you and means that their system is both fast to deploy and flexible to upgrade. If you'd like to learn more about Finext Robotics, you can check them out at www.phinxt.com. So that's it for this week's Future of Automotive segment. If you're an auto tech entrepreneur working on a solution that helps car dealerships, we want to hear from you. We are actively investing out of our dealer fund. If you're interested in joining our investment club to make direct investments into auto tech and mobility startups, please join. There's no obligation at all to start seeing our deal flow, and we continue to have attractive investment deals available to our members. Don't forget to check out my book, The Future of Automotive Retail, which is available on Amazon.com, and keep an eye out for my new book, The Future of Mobility, which is almost done and will be out soon. Thanks as always for your ongoing support and for tuning into CBT News for this week's Future of Automotive segment, and we'll see you next week.
Thanks for watching the Future of Automotive with Steve Greenfield.